And so to compare what you've learned about Bitcoin as an asset class, what else might compete with it? Does anything come close? And from a portfolio construction, like as a research analyst, maybe I could ask yourself, what do you own? And is there anything else you could look at?
Right. So for me, the only other the only other handful of assets that are going to really do well over the next decade plus are gold and U.S. real estate, right? Now, U.S. real estate is an interesting one because it's not going to appreciate to the same degree as, say, the S&P 500, right? The S&P 500 rises something like its 10-year compound annual growth rate is something like 10 or 11%. So every single year it appreciates 10 or 11%. Bitcoin's 10-year compound annual growth rate is 89%. So every single year, on average, it will appreciate
Mad, isn't it?
89%. Yeah.
Mm.
And its 4-year compound annual growth rate right now is something like 30%. Okay. So even still, almost 3 times what the S&P 500 is. US real estate is only 4%. But the reason it's going to be such a great asset class for people to own, and I'm talking about stateside here, is because you can't live in gold, you can't live in Bitcoin, but you want to be able to live in a house and own that house. And so the reality is people are sitting on these homes that have probably an insane amount of equity in them, particularly, older millennials, right? And so over the next decade, which is going to be very inflationary, these two asset classes that people can buy and not live in, but are great inflation hedges, monetary inflation hedges, are gold and Bitcoin. Those are the two assets that are going to win out substantially. And over that period, over the next 10, 15, 20, 50 years, Bitcoin is going to demonetize gold, is going to surpass gold's size because it does everything that gold does, but better, right? It is a better store of value because it's absolutely scarce, not just relatively scarce, because Bitcoin does not have a supply response. So with any other asset, stocks included, and gold, whenever the price goes up, the supply goes up right along with it because the people who are creating more of it, whether you are a company or you are someone who owns a gold mine and actually sells gold, you say, hey, look, the price is going up. That means we have more to invest, in equipment. Let's buy more drills. Let's get more of this stuff out of the ground. And then eventually that puts a downward pressure on price, on the individual unit price, right? Same thing with stocks, right? If a company is doing, let's say, take NVIDIA, for example, them doing 2 10-to-1 stock splits over the last several years, I believe. That's because the price appreciated to such a huge extent that they said, all right, for every 1 share, you now own 10 shares. We'll cut the price all the way down. That way we can issue more shares, right? Ultimately, it dilutes the individual unit price of that asset, whether it's something more paper like equities or whether it's something very tangible and real like gold. Bitcoin has no supply response whatsoever. As the price goes up, Bitcoin miners can't collude with each other and say, you know what, let's increase the block reward from 3.125 Bitcoin every 10 minutes to 10. Let's enrich ourselves because the Bitcoin price is going up. Because it has no supply response whatsoever, every single model, economically, pricing wise, is totally broken. Because for all of history, there's always been a supply response. Whenever the price of something goes up, more of it gets put into circulation, it becomes worth less. Or in the case of something like tulips, it becomes worthless. The tulip bulbs going totally insane in Denmark and Norway and Sweden. All of a sudden, let's just plant more flowers, right? And then the value of the tulip bulb goes down. You can't do that with Bitcoin. So to compare it to any of these other assets that are a bubble where more of it can be issued, or suddenly it can all collapse to zero, A, more of it can't be issued, and B, it won't suddenly collapse to zero because the value proposition doesn't go away just because a whole suite of people say that it's worthless. The reality is that Bitcoin's price continually going up year after year over the last 15 years, 16 years now in a stepwise fashion is just proof that this value proposition is becoming known by more and more and more and more people. So Bitcoin is an idea whose time has come. It serves that property of an inflation hedge better than gold because, again, it's absolutely scarce. It's also more portable than gold, right? You can't travel across borders with $1 million in gold. If your home burns down in Los Angeles, for example, looters may break into your home and steal that gold. You can't evacuate with your 50 gold bars. You can't evacuate with your seed plate in your pocket, right? Or your hardware device in your pocket. And so Bitcoin performing gold's functions much better than it does, even though those two assets are going to be the best performing over the next decade because of how inflationary it will be in the next 20, 30, 50 years, as I mentioned. Bitcoin will slowly but surely eat away at more of gold until it is larger than the asset itself. So as an analyst, obviously, I want people to live in a house and I want them to own it. But for younger people, right, renting is not a bad idea, because of where mortgage rates are now. And so, for me, what I own is I own a mix of some higher beta equities. I own Bitcoin, obviously. I own some U.S. Treasuries. I put a relatively small portion into U.S. Treasuries when rates were around 5.5%. And I'm really happy that I did that, right? Because now for the next 2-3 years, I'm receiving fixed payments of 5.5%. Monetary debasement is, coming in at probably 3.5% every year versus the reported 2.5-ish%. And so, I'm receiving basically free money from the U.S. government. But that said, it's not something I would advise people to put their whole portfolios into. It's risk free in the sense that, the US government's never going to default. We can't. Otherwise, the economy is going to collapse. We're going to spark a world war. So, I'm receiving these fixed interest payments, these coupon payments. And then at the very end of it, I'll get repaid my entire principal. But largely because of the way the world is headed over the next decade, I own a mix of equities, Bitcoin, and some US Treasuries. But as rates come down, those become less attractive. But then the upside to that is if I ever wanted to sell the Treasuries that I own, I would get a huge markup on those because yields are lower now. Yields were higher then. My Treasuries are worth more now. And so let's say before the maturity of my Treasuries, I want to sell these things, then I can get way more for what I, for my dollar than what I paid for them. And so for me, it was a tactical move to buy some Treasuries when rates were that high because I knew that was going to be the cycle high. That's what the market was saying. But for most people, right, if you're constructing a portfolio, you ultimately want to look at what's going to happen with the money over the next several years, right? Forget, you can look at trends like AI and all this other stuff. But largely, if you're not owning the huge names like NVIDIA and the like, you're going to underperform, right? The chances that you're going to find some kind of penny stock, some kind of brand new company that's, hot on the scene and outperform Bitcoin is extremely low. And so for most people, right, you don't have time to be your own analyst, or you don't have time to hire a financial advisor to do this stuff for you. And so and of course, not financial advice, but if you're just looking at the monetary reality of the next several decades, you can just own Bitcoin, basically outperform everybody. And so that's what I advise people to do. The lion's share of my net worth is in Bitcoin. I have a few other things here and there, but that's purely for some potential beta on top of my Bitcoin. The main horse that I'm riding, right, in this race is Bitcoin. And that's what I generally point people toward.
Awesome. Thank you for sharing, Joe. I always love asking people what they actually own because it kind of cuts through all the other stuff we might talk about. So, okay, he actually thinks that and has actioned that in some way.